Welcome to Giving Back is Dead. Giving Back is Dead is about generational changes in attitudes towards giving to the arts. Today we're talking to Tom McLeod, who is founder and CEO of Arkive. Tom, what I would like to do today is really talk more about FTX crypto, its collapse, and its implication. But nevertheless, for the people who are following us, I think it would be a good idea that you explain a little bit about what is Arkive and what you're planning for Art Basel Miami Beach, and also what did you think of Paris and Paris Week?
Sure, I love
If
that.
we can do that a bit briefly, and then we'll get into what I really, really want to talk about.
Yeah, I'll answer all those three questions as briefly as possible. What is Arkive? At Arkive, we're basically inversing the museum curatorial process. So members of the community get to come together to vote on what we acquire into the collection itself. That collection then goes out on display with a goal of 100% out in public spaces for people to interact and view them. So at the core, that's what we're doing. It's a new take on what it's like to build a decentralized museum vis-a-vis the voting mechanisms, and then a distributed museum vis-a-vis the location. So putting those things together, and how large, how fast, and how big, and how impactful can we make that in the coming years? So that's
actually quite exciting, because it's exactly trying to address the ills that we feel of the traditional museum model.
Yeah, I love a museum. I go to many of them. I think they're great. I'm not anti-museum. I just think there's some innovations that we could go to try that historically wouldn't have been possible. You couldn't work with people as quickly across numerous continents. You couldn't move data as fast. You couldn't come to consensus as quickly. You couldn't verify those things on chain or off chain in previous decades or certainly centuries. And this is an opportunity to sort of, just like you're looking at revamping the way giving works and how those platform works, I think we can revamp a lot of the different ways that people come together to actually experience, collect, and curate art broadly. So that's our mandate.
I think that's exactly why this is interesting, an interesting collaboration for us, because it seems to me that you're addressing the reasons why I see this new generation hesitating getting involved, particularly in the more traditional institutional model, which they see as elitist on all the various levels, which you are addressing, I believe, beginning to offer a different model to everybody.
Yeah, I mean, I expect, when I look at the current community at Arkive, it probably ranges from 19 to 70. So we actually are capturing a pretty broad swath of age group there, but it's certainly bell curving in the, probably millennial. We've come into some sort of capital. We recognize what we care about. We want to start thinking about those things broadly. We started to spend time on passions, not just projects, which I think is what your first 40 years probably looks like. And your back 40, you start to want to do something with a little bit of the energy that you've now stored up. And I do think this is a slightly different model on just being, I'm going to take my $30 and become a member, and I'm going to get a free day, one day ahead of everyone else. This is like, I'm going to participate more actively, and I'm not thinking about it just because it's near me and that's where I could have a fun dinner party once a quarter. It's because it's everywhere, and I like to travel and meet people, and this is a great way to do that. So Arkive touches a lot of those different things that I think are trending towards the way a lot of this stuff is heading in terms of interest and participation and what people care about.
Are there Gen Zs who have become members?
Oh, there's certainly Gen Zs. They're in that 19 cohort. I don't know if they would say that's the second largest group, but it's probably close. We haven't really sat there and tracked ages beyond me anecdotally seeing on Zoom calls that there's certainly a range of people on them visibly from age. But I think we probably track Gen Z even further, right? Because in this case specifically, they haven't necessarily come into capital where they're acquiring much yet. They're probably not able to support museums in the same way with disposable income as a donation or a membership, certainly not at scale. So being an archive gives them a touch of all these things that they could be and plan to be in the future at a significantly lower entry.
I think that's one of the exciting things about Arkive. I think it's great. So tell us what you're planning to do at Art Basel Miami Beach and why you took a booth, why did you take a booth in the VIP lounge? And
Yeah, so we're one of the core host sponsors at Art Basel this year. For us, it was a little bit of, let's show the world we're here. A little bit of great participation and opportunity with the team at Basel. Like when we reached out, they were really interested in in seeing innovation touching blockchain that wasn't necessarily just like an NFT gallery or something that's been kind of well tread over the last 2 years. I think provided an interesting look at to where a little bit of art, a little bit of collecting, a little bit of museums, a little bit of curation, and certainly where community can head. And that really ticked a few boxes. So it's not like there's a million spots there. I think there's only four, maybe six max people in that area, and we're running a 600 square foot dedicated lounge with, for the first time, all the items that have been collected and curated by the community this year will be on display. And also, oddly enough, maybe the last time, because they're going to come together and then they're all going to go to where they're being lent out to, and that'll all be announced in Q1. So this might be the first and last time the first collection of Arkive ever comes together. So it's also a little bit of a little exhale for the team and everyone in the community that's been working so hard to get to experience it. So all of that came together, and it's well timed, and it was at the end of the year. And yeah, I think it's a great opportunity for people to learn about Arkive, to experience the collection, to meet interesting people. And for us, it's a great opportunity to do the same in reverse, showcase all those things out to the world.
so tell us a little bit about your experience in Paris during Paris Week. What did you do there and what did you think about it?
I thought it was pretty great. I mean, first of all, the location was incredible. I've never been to an event in that specific sort of conference center grounds location. You feel some kind of mystique when you're like looking out at the Eiffel and all this stuff, and then you're browsing art, and then you're in the center of a lot of it feels like the world at some level. And then in terms of what was on display, it was an enjoyable, it felt, what's the word I'm even looking for? It was all over the place.
Yeah,
Like
well,
it was very all over the place, which for me is fun because I kind of thrive in chaos. But it was interesting to see that it felt like the world was trying to figure out what its consensus was for what we wanted to show at the moment, and no one had called each other. So every booth had dramatically different items and things to talk about, and there wasn't a ton of cohesion there. But for me, that was positive. I think that could be interpreted in numerous ways. If you were looking to figure out exactly what the world was reflecting back at you, this probably wasn't that moment. But and besides that, everyone was in, I would say, very good spirits, which I liked.
yeah.
The energy was definitely right. I obviously am relatively new to the overarching art world, but between the dinner that you and I threw, which was definitely a high point, and certainly for anyone that attended, as well as many of the small sub events and groups and meetings and stuff I took, everyone was very excited to feel like the world was back and creators had a place to showcase. And there's definitely a feeling that Paris had some kind of was having a moment, like Europe was starting to look like Paris was the center of art and creativity, which, from my understanding, feels like it's been pulling towards that for a while. But this kind of maybe christened it a little bit, and I could feel that energy as well.
Well, I definitely felt that too. Have lived most of my adult life in Paris, so it's nice to see it. And I saw the movement from Paris to London, and the idea that it's sort of
Mm,
coming back is very agreeable to me. And I hope that indicates that you will continue to do things with us in Paris.
absolutely. Give me a reason.
Now, talking about, maybe we shouldn't immediately go to this, but talking about, these art world themes as you did, and you didn't see any specific theme at during this Paris Art Week. And there are themes. Like in the last few years, the theme has been NFTs. And everywhere you went, every single art event, it was NFTs. For instance, last year, which was the first year we really had Art Basel Miami Beach back in full force for the VVIP opening, where you entered was a huge NFT presentation lounge, etc. So you entered, all the VIPs entered through this NFT demonstration, and everything was going on. And I think just before that, I had been to Art Dubai, and Art Dubai had like a floor of NFT producers. So it was like you were a complete idiot if you were not completely buying in and involved with the NFT world. So I wonder if you could maybe talk about that an instant. But I think that that's part of the whole conversation about FTX collapse in crypto and blockchain. Is it
I
not?
think that's probably a good place to start. And I do think a lot of those things need to be separated out, and we can probably get into that discussion, right? I mean, there's cryptocurrencies, there's NFT tokens, there's blockchain technology, and I think we like to bucket those all in together. And while a lot of them are enabled by blockchain, they are different things. And I think a lot of the stuff that's going to come from blockchain hasn't even really hit mainstream. It's like it's infrastructure and structure, which is a lot less sexy than images and speculative money. So that's just been kind of the lower hanging fruit. But in specific response to what you're saying, I do think the art world, like many other worlds, at some degree tends to follow capital. And when there was a ton of capital being poured into one specific thing that was tangentially tied to it, it was able to showcase itself in a way that felt like a self-fulfilling prophecy. I personally think that the future of sort of NFT-based art as a thing will be tied significantly more to actual art. It'll be tied to provenance. It'll be tied to certificates of authenticity. It'll be tied to the technology and verification and appraisal. I think we'll end up using the technology of non-fungible tokens as more of a systems increase to the validity of art and to tracking, as opposed to being the tool by which art is disseminated or distributed. I also think there's been multiple different layers of NFT that have been kind of overlapped, which also probably in the beginning was very beneficial because it accelerated it, but detrimental to people who were more focused on what they really cared about. And so you kind of have this overwhelming amount of profile pictures. They're called PFPs. So these 10K collections that were
Yeah.
generative art, that while some had very altruistic goals or were very well backed, some were clearly now in hindsight scams. Some were scams from the moment. And that was probably legitimately like 90% of the overarching market was being driven by these, we're going to make a thing, it's going to be worth money, flip it. It's a new way to rapidly iterate the art world. Then you certainly have this other group which was doing a similar thing, but they did have actual plans. They were thinking about building worlds and media and games and all these things off it. And I think some of them actually suffered because of their proximity to the scam, even though they were certainly coming to build something for real. And then you have people that were just actual artists, and this is this incredible opportunity where they couldn't figure out how to get their work found in the traditional gallery system. They didn't know how to to source, update, showcase, put their work out in the world. And this seemed like, wow, we've done it. We've disintermediated the system. I can use this and everyone can still find me. I think that was probably a bit premature in terms of thinking you can just show up one day and the whole system will revolve and adapt to you. But I do think that will probably have some long-standing effect where there will be a pipeline now for people to utilize NFT platforms and marketplaces to grow. And then lastly, I think there's just what probably is the long horizon of NFTs, which will be simply for communities and gated access and ticketing and verification and validity. And I think that's probably where the technology best shines, which isn't necessarily tied to art unless it is tied to, you could picture a museum membership being actually an NFT and how long you have it and perks being awarded to it, and it's a verification of identity. That's a bit of a rant, but I do think it's important to have an intellectual discussion about the different levels of those. And while there was a bulk of it that was clearly, frankly, bullshit, I think there will be some things when this all said and done that does continue to grow. Like blockchain broadly isn't going anywhere.
The use of blockchain in the way that you suggest it will remain, which is basically tracking authenticity and provenance and continuing revenue stream to artists, all of that clearly is a plus. And I agree with you. It will continue to be a part of the future. So the speculative aspect, because you said the attention follows money. But so the
Mm.
money, basically, there was all of a sudden this incredible boom in terms of valuation of NFTs, which attracted
Yep.
all this attention, media and everything. But if I understood correctly, that this was mostly speculation on the part of crypto owners. Is that incorrect?
I think that's probably accurate. When you look at the amount of individuals who have overarchingly transacted with an NFT, I think we're sub 12 million people. And of that, it's like 100,000 that were ever active, like really moving large numbers consistently. I mean, it's very small numbers compared to like global financial markets or the global art market or anything of that. So that kind of tells you that it was smaller than it looked. I think we were also looking at market caps as a reflection of size, because the market caps were just very poorly calculated. So the market cap was just, well, if there's 10,000 of these things and the last one sold for $1,000, well, then this is worth 100 million, $10 million. That's actually has no reflection of the true liquidity in the market. And I think we found very quickly that it was quite thin when it actually came down to it, that these markets could fluctuate from hundreds of millions of dollars of value to literally hundreds of thousands of dollars in value in a matter of weeks and or days when people needed to get capital out. If you compare this to a traditional market like real estate or something, you can see a massive depression in a real estate market, but real estate rarely drops more than 10 to 20%. I mean, you'd be in a mega recession if you couldn't get that amount of capital out, in trillion-dollar markets. So it's slightly different into how that was perceived and how that was run, and largely is because of the way I believe it's calculated. It's calculated in a pretty silly manner. It's calculated like being the best boxer in the world just means you beat the best boxer in the world. But that actually has very little bearing on every single human in the world. Could you beat them? And that's kind of how we were calculating NFTs versus how much actual liquidity is in the market if you needed to sell at any given time. And that's a pretty complicated way to build math. But that's how it was tracked. So paper thin actual books there for calculating value.
Which is why the whole understanding the bigger picture is probably important. But I don't want to forget what I've understood is that the collapse in the crypto market has had an enormous negative impact on a lot. And one of the things that because I think we have talked about the fact that one of my missions in life and professionally is to be able to find independent revenue streams for nonprofits in the arts. Okay, I think part of the future is independent revenue streams for these arts nonprofits. So that's really where I'm coming to think and look about NFTs, about crypto, FTX. All of this is my interest has really been about, can we think? And there was a while, obviously, as you probably can understand, where I think, maybe I don't know how many months back, where at least every week or every other week, I was getting a new producer who mints NFTs, who was coming to me and asking me if I could help them and introduce them, be the bridge to the arts, to arts nonprofit. And I was interested, but I never felt comfortable. Now, then recently, I was talking to someone who was talking to me about Web3 applications for arts nonprofits, and we did a little bit of work on it, and we were getting ready to do something. And it was all about what you're suggesting, which is now, I believe, we can call social tokens. Is that what we can call a social token? So we're going to distinguish NFTs from a social token. And then what I realize now, since this collapse in the market at FTX, is I am told that these issuing of social tokens and creating communities, which I thought all of this was quite compelling as a future for arts nonprofits. And I'm told now that we can't do this because of the collapse of the crypto market. So maybe we should go back and talk a little bit about the FTX collapse, the impact on crypto, the future of the crypto. Because one of the things you told me we haven't had a chance to talk about is that it has really had an impact on the whole tech universe.
There's a lot of different ways to start that conversation. If you're looking at I think the tech universe broadly is certainly private tech before it becomes publicly traded companies is deeply bolstered by venture capital. Every major tech IPO, historically, very few were bootstrapped companies. Almost all of them have raised hundreds of millions, if not billions of dollars from venture capital by the time they make it there. That is an industry that is kind of predicated on the fact that a lot of things will go to zero and a few things will go to a billion. And as long as we maintain a couple billions and a lot of zeros, we still win because we've put a lot less into this and a lot more multiples, right? And so
as a matter of fact, it's not that different than people who speculate in the art market. because that's exactly what they say. They collect 100 things, and one goes up in value, and it pays for the whole thing. So it's not that different, actually. By these, we're talking about thin, unregulated markets.
Totally. And I think when you're looking at venture, you have more regulation, but you're still largely dealing with private companies with private boards that don't have to put out much unless they're doing financial tech. The vast majority of tech companies are running like family, like a mom and pop shop. To be honest, they don't have to run out and tell everybody everything they're doing every time. They have a fiduciary responsibility to their investors and their board. And so a lot of that capital, obviously, over the last 3 to 4 years, has poured into crypto. And that money, where did it go, right? So it got bolstered into the generation of tokens. It got bolstered into the creating solutions for the technology to trade those tokens. It got put into places to hold your tokens. A lot of it got propped up around this specific industry itself, with capital that was being poured in. And because very small amounts of money could move those markets, because of the way they're calculated, like we described earlier, it didn't take much to sort of make some tokens worth a ton and some worth a little. And almost not every, but maybe that's a lot, a large amount of these companies started creating tokens whether they needed them or not. Because the idea that you could have some sort of exposure to the success of the company based upon a token that was created seemed like this magical holy grail. It's not ownership, you can't vote, but it gives you some kind of equity and value, but it's not the same as being an investor. And in fact, those investors get a piece of it, so they can use that as a way to dump capital and get their liquidity out earlier before an IPO or before any of these things happen. So that sort of sets the stage. When you look at what happens with like an FTX collapse or anything else, you start to learn that everything is unbelievably connected, because again, there's really not that many people using crypto. I mean, it's a big narrative, but net of humanity, net of people who use cash or credit cards or banking period, or even like money transfer, it's very, very small. And so earlier in the year there was a massive collapse in a token that had huge amounts of people exposed to it. Many different companies. It was called Luna, and they had two things. They had their own token, which dropped, but their token was part of a system that was supposed to keep the peg on a stable coin. And a stable coin is supposed to maintain one to one with whatever offline asset that is. In this case, it was tied to a dollar. And suddenly we had this crazy thing where both the token that was only there to keep the peg, because people would arbitrage buying and selling to keep the dollar peg, and then it all collapsed at the same time. So now you've opened up a whole new world, because people weren't speculating on the stablecoin. They were holding it as a place to just park their money. You have average individuals, normal people, as well as giant hedge funds holding in that currency while they were waiting to go back or deploy more cash. So you suddenly had this unregulated, unknown market lose who knows how much value. And that created giant holes in the order books of these other companies, specifically a lot of these hedge funds. And a lot of them had exposure to FTX. And FTX itself also had its own token that it had created, which for all accounts and purposes really didn't do anything. It didn't have its own network. It didn't do much, but it had a market cap in the billions of dollars, because people viewed it as a way to invest almost in the successful company FTX, which had this very well-regarded founder, and I should hold it for some reason. They did a lot of shenanigans, it turns out, both utilizing their own token as collateral to pull debt, to do investments, as well as when their token starts collapsing, they also started to just take customers' capital and just use it, which one side was crazy and the other side is just purely illegal. And these things come together at once to basically drain, 13 to 15 billion dollars in a matter of 4 days from an industry that in theory has about a $500 billion market cap at the moment. I think maybe it's a little lower, a little higher. But we all know, because we talked about this, it's not really worth that, because no one could go and just sell $500 billion and get 500 billion out. Maybe you could get 50. So if you saw that as a reality, 13 drains out is a huge collapse, and that has forced a massive reckoning on everything else. That's a brief on the FTX debacle. I don't know if that was helpful.
You don't mind if we continue talking about it a bit more, do you?
Oh, I'd love to talk about it. Sure.
Okay. So, what do I understand correctly that to what extent were these venture capitalists upon whom all of these new tech ventures are based? To what extent are they dependent on crypto. I mean, I presume that they have been. So this kind of collapse in crypto, I would assume, means that there are less funds available to invest in new projects or continue to provide additional capital for projects.
So it's interesting, right? I mean, that was 2.1 billion lost, I believe, of venture capital. That's just all being written to zero. In the last 24 months, I think there's been over 17 billion raised in new funds that are purely allocated to crypto. So Andreessen Horowitz, I believe, raised 7 billion by themselves. A few of the mega funds here. So there is still something like 11 billion, I believe, unallocated capital that needs to be deployed into crypto projects because that's the mandate of the PPMs of the funds that have been created there. So it's not like we're completely out of it, but what it did do is it reassessed the valuations. So, the reason those funds were so large is because the valuations on the companies they were investing in had skyrocketed. So if you were investing in a company and it's a seed company with no money at 100 million valuation because the idea seemed good, you can't put 2 million in. You've got to put 20 million in because you have this huge fund and you need to see returns that make sense for your LPs, for your investors. Now we have this problem where it's not a problem. Now we have a massive reorg in terms of what we think those companies are worth. So a company starting today is probably going to be valued at 25 to 30% less, not less, of what they were, maybe 6 or 7 months ago. And now means you're also deploying less capital into them. So where you used to have to write 20 at 100, you're now going to write 5 at 20. So these big funds still exist, and they're almost in a tricky spot because they don't even have places to put the money anymore. It's very hard to get rid of $7 billion, $5 million at a time. You need to write $100 million checks. So there will be this interesting reckoning there. But the capital is still there. I think what's mostly happened is there's a lot of air out of the sails. I think just like art and how we discussed with Paris, there is a theme or cohesion or lack of. There's a meta. It's a concept in gaming. It's called the meta. And this is not metaverse. This is when small changes happen in a video game, like an online game, the entire game changes. And this could mean, you're playing a strategy game and an update rolls out and they make the wizard slightly more powerful. Well, now everyone starts to play as the wizard, where last week everyone played as the ogre or whatever, right? And so in this case, the meta has shifted, where for 2 years, everyone wanted to play in crypto. Now the only people that still want to play in crypto are the people that are hardcore believers in the technology. I think this is net positive. I think it shakes out the people who just were there for speculation. So I think long term this is good. The meta has probably shifted towards like AI now. Even when I talk to art people about tech, now they're talking about AI art and DALL-E and Stable Diffusion and Midjourney. The meta has shifted to AI on everything, where last year it would have been crypto. And that's just the way the cycles happen, right? And at some point it might cycle back to crypto. At some point it might cycle back to enterprise sales. Like the business of business changes a lot, and it changes in every industry in different ways. So for me, I look at this as it wiped a lot of capital. I think the thing I like, the part I find the most distasteful is that it's not just investor capital that's lost in these. The problem with crypto is that its exposure is to some degree of just average individuals. The ease at which you can acquire it, the whole system based on kind of promoting people to join, create a situation where 2.1 billion of venture capital money is lost, which is probably relatively negligible change in life to its overarching supply of capital. It's the how many billions of just average people who had 40 grand in it, or 50 grand that was, years of labor. That doesn't usually happen. That when tech blows up, it doesn't usually destroy individual lives like that. And that's the big problem here.
Yeah, but this is what it seems to me that all these tech-related projects, and there were a lot, as you say, of tech art collaborations that were beginning, that all of this was based on projections as to a larger group of people buying into essentially crypto. That's what it was based on. And fundamentally, the crypto proposition is based on decentralization and no regulation. It was a self-regulated environment, and that's its appeal. I mean, I understand that appeal. And who, as you know, as we've talked about it, I was quite fascinated by Sam Bankman-Fried, and because of his work on effective altruism. And as you know, I was like many other people. I mean, you saw there was a long article in the Atlantic about him and about effective altruism. There was a whole big article in the New York Times. He was a quite compelling figure. And I bought into it. I was fascinated by him. I listened to. He was on a podcast with Sam Harris, which was very compelling. I mean, he's clearly, he was promoted, and I believed it as a kind of genius of this space. And I still have difficulty understanding this. Now it seems that it was fraud, that it was really. And I'm even talking to people now. So what also interests me is its impact on philanthropy, its impact on my topic, which is giving, because he, as you know, was an important figure. He had structure in place, and he had also commitments, which are obviously not going to be honored. Which I think probably, so I think there must be other entities which also will not be able to fulfill their commitments to the nonprofit space. Anyway, I think that for me, who's not tech and not who was beginning to believe. I'm someone who's beginning to believe in the whole thing. And SBF was one of the people I was believing in him. And his whole talk on effective altruism and supporting that, and how do you look at determining what nonprofits to support, I thought that was very compelling. And now we're being told that that was basically BS. And it was BS that he was promoting in order to have this basically a kind of Madoff scheme in his FTX. What do you think?
Yeah, I mean,
It's very troubling for me. This whole
the
FTX thing is terribly
multi-part
troubling.
a multi-part answer, to a multi-part question. Uh, I don't necessarily think the sentiments that he was putting out were wrong. It just turns out, the emperor had no clothes at some level there. Um, the, the I think the crazier part is that it turns out it was like sociopathic, right? So
Yeah.
he's putting out these things, saying one thing. Um, it's like sociopathy plus greed. So
But here he was wearing Bermudas and living in a dormitory. How could he be? He didn't seem like a greedy person, and he said he was going to give all his money away.
the actual business of FTX was a really good business. That business, the core business model, trading tokens back and forth, etc., was doing 8 figures a day in profitable revenue. So this is a good business. So he showed up and created something that actually needed to be there at some level. There was clearly enough demand to generate a really big business here. There was numerous levels of negligence on top of that because one, he was able to raise $2.1 billion with no board of directors, which seems unheard of. Who does that? Why was there no oversight on top of this? How was that possible? Where was the breakdown there? So that's one. That was
How
irresponsible.
did that happen?
I can give you numerous reasons. I think people over-index on an archetype, and he had all the major boxes of what Silicon Valley thinks is,
Yeah,
or historically has said is right. It's like they felt like this was another Zuckerberg type thing, right?
yeah,
Like, so he's playing video games on their calls. Like, there's numerous stories about how he raised like $400 million while doing his pitch while playing League of Legends. And when they found out that he wasn't paying attention to them, that he was pitching while playing a game, it made them more excited to invest in him. Which,
yeah.
you
That's a
kind of got to
sign that he
picture
is a
like a
genius.
woman. Yeah, you
Yeah,
got to picture like a woman or a black guy doing that, and how fast they would have hung up on that
yeah,
call. But like the network of how the mystique that he had created around nailing the archetype that just checks the boxes for could change the world. And there's numerous quotes that his pitch wasn't he was changing crypto. His pitch was that he was changing money. And when you look at the TAM of money, how could you not invest? And that's
yeah.
so these types of statements sound so preposterous in hindsight, but that's how he was able to do that. And then, he was able, without that oversight and, a very vice grip on a lot of different pieces, to create all these different programmatic backdoors where no one could see the changes and stuff that he was doing. He had a hedge fund and 141 shell companies that were moving money all between each other. It was such a nightmare of accounting and underreporting, offshored into a non-US oversight district, that no one could ever make heads or tails of it. And he knew that because he is clearly a very smart individual with how to do these things. But at the end of the day, he made some really crazy miscalculations. And the biggest one was simply that it wasn't enough to make 8 figures a day. I mean, if he had just continued on that path, he probably would have been 3 to 4 years further out from his ability to make all those statements come true, but they would have still been true and he would have been able to do them. It's because he decided to lever all that up, go full risk on, and then to make purely criminal activities. And so there's something to be said for just, the the Icarus of it all, and how that looks. But, I can't get past the pure criminality of it all when it's all said and done is just preposterous. It was an unforced error that didn't even need to be made. That's hurt so many people, and that seems terrible. That is simply terrible. But where does it all go? I think if you want to take the positive spin, all the things that you described in the beginning, self-custody, decentralization, FTX was none of that. FTX was the opposite of what the overarching promise of blockchain had been. The promise is you control your account, you have a wallet, you have autonomous, when your money is and where it's at. As long as you don't tell anyone your password, it'll never go away. If you can transact across borders anonymously or not, or known, you can move it to a different. That system, those ecosystems should be, are still there and probably are now where people are going to move more to, which if you're, a crypto long-term bullish, that's what you would want to see. I know personally the people who make the ledger, the hardware wallet piece, had, one of their biggest weeks ever. Everyone moving all of their money back to private ledgers. And that at some level is a good sign if you believe in the technology long-term.
So you do.
So
you
I
do
do,
believe
yeah.
in it. And you do.
I do.
Believe
I actually,
crypto.
I will tell you, I think cryptocurrency is one of the worst implementations of blockchain. I don't think currencies are a thing that I think people are largely fine with dollars and credit cards. It's a thing that like a very specific group of individuals are like, I need to exist outside of the global finance and banking system, is like, I don't think my uncle cares about that at all. I think he cares about paying his mortgage on time and a dollar being a dollar, and he cares about global inflation, that he can't get the same gallon of gas that he did last year, but he doesn't care about, can I move money across borders? Like 98% of the planet could care less about that. What I do think they care about is, access to things that are interesting, verifying who they are, being able to experience the world at different levels because they have, something that could quickly transact. And when they do travel, they have, their money with them that they control, and they don't worry about it being stolen or being taken away from them or paying exorbitant fees through Western Union or something. I think there's a lot of things that could level down to the average person, but most of the stuff that has been built on cryptocurrency, on blockchain thus far, has had very few mainstream uses. And the stuff that I think will have mainstream uses are going to have to battle massive incumbencies. Like ticketing seems like a no-brainer, and real estate seems like a no-brainer, but you're dealing with 100-year incumbents in these space. You're dealing with giant families and massive wealth and things that aren't going to happily relinquish control of those spaces. So if we're going to take the 7 billion or the 11 billion left, let's use that to at least start building that stuff, because another token isn't going to be the thing that does it.
Okay, so basically we're going to leave the discussion on a positive note. FTX collapse, cryptos collapse. It's really, and I saw it's really at the same, Bitcoin and Ether is about the same level as, 2 years ago? No?
Yeah.
I think
which
2 years ago. I mean, what doesn't seem so dramatic to me.
Yeah, I mean, it's only dramatic because of the way it's been pushed, right? I mean, it's because last Thanksgiving, a year ago, a bunch of people who had made some money theoretically on the upswing of those things sat and told all of their family members, hey, you need to buy this. And they were within, 20% of the all-time high at that moment. And now they're all got to go and sit and have Thanksgiving dinner in 2 days. and and that same uncle who didn't want, who never cared, is now really cares because you lost the 10 grand that he didn't put into his mortgage is now worth 2, and he's not pumped about it. So that's a very different thing. And again, that's why I think the speculative asset is kind of iffy.
So Tom, why don't we tie this up? And what do you think about the future? Is there a positive future given this FTX crypto collapse? What is the future in terms of tech art collaborations, and in particular implications for arts nonprofits?
Yeah, I mean, I think it's actually pretty bright, to be honest. A lot of the stuff that we did learn during this time doesn't change, right? So the ability to have traceable, guaranteed donations, the ability to lock up capital, the ability to create secondary splits, the ability to program money in general as a concept is pretty powerful, right? So that computers can make this, that you can track it, that you can do it, that you can say when this amount of money comes in, automatically do that. I think a lot of the hurdle that at least friends I know, my father actually ran a nonprofit. Like I've lived in this space for a while. And so much the hurdle is awareness. It was like, hey, it's holiday season. Do you want to send turkeys to people? Hey, it's Christmas. Do you want to buy a gift for a small child? Hey, you'd have to constantly keep re-engaging. And what I do think crypto could allow it to do is create, almost every human could create small endowments, where if you automatically moved a little bit of your capital into a pot, and that capital was then able to be distributed or disseminated or invested, and then the earnings automatically move, you could get people into very long-term positions. A lot of individuals doing small amounts that sum up to a lot pretty quickly. That in today's current situation is very hard. It's hard. I remember when I was a kid, and it'd be like 75 cents a day or 20 cents a day to sponsor a kid. And, you have to buy, once you do it in this case, you could kind of set it and forget it. And you'd have all the data, all the transactions, everything you've ever done. So I think there's a lot of places we can go with thinking about how to work on philanthropy broadly on these systems. And it's probably a better place than, in random token goes up, so I'm going to give you some percentage of my capital. I think there's replicable structures that can engage and keep people in. You could also even think about, if an artist created a piece and they just locked up 3% forever, every sale from then on forever had a 3% push to someone. Like this has nothing to do with the JPEG or the image. This is just the contract for over that is attached to it demands that you move this, and every time a sale occurs, we sell this with it. It's part of the actual art is that this piece goes with it, and that's how they continue to support something forever. I think these trends and these pieces are here to stay, and this is the best technology for it.